Now I don't like shit. I don't like shit in this range because we didn't. I'm gonna be a fucking snob with my trades because I don't want to lose my money. We didn't clear liquidity. We got caught on the 0.25, so we've already had one touch of the 0.25. We've got this 5-minute fair value gap here. And we've got that 5-minute fair value gap and the 0.25 pinch in here. So this is, don't fucking take fuck all for trades here. And then taking trades down here is a sucker's bet because we did not clear liquidity. So there's nothing. There's no trades. Can you trade it? Sure. For me, there's no trades. So we need to get into the fair value gap above this red box, or we need to clear liquidity. Even a 0.25 rejection again, when we've already cleared out that 0.25 once, it goes from a B- trade to a fucking 50-50 coin flip. And you guys know that. Every time you have that selling and we pop up and we fuck around at that 0.25 and then we pop up, but we can't get all the way up into that midpoint, into the 0.5, it's a sucker's bet. Because then we end up doing this shit, come down to 0.25, up, clear it out, then we come and sweep all the way down. There's no trade here. For me, there's no trade here. Can I trade it? Of course. And then, if you want to talk about risk reward midpoint, let's midpoint that 0.25. And I'm gonna actually highlight this so the colors pop up because I want you guys to see what I'm talking about. There we go. All right. So right here in this 0.25, let's split that. All right. Any trade, any long taken above this midpoint, you're upside down on your risk reward. Any short taken below this midpoint, you're upside down on your risk reward. What are you doing trading at? You're upside down. I talked yesterday about that. I want that $1.50 return on my dollar. That means liquidity clear out bounce trades I need to take in the first third. So I need to take it there or better. Or the risk reward doesn't make sense. Any 0.25 rejection trades I need to take by that third down. That top third rejection. So let me change the colors so you guys know what I'm talking about here. So I need to take those. I need to take those rejection trades in that top third, or else your risk reward is in the weeds. And anything in here is a sucker's bet. For me. I don't know why that keeps popping up. It's been making me fucking crazy. And we have no liquidity clear out, and now we're just chopping. So let me delete everything that's making this chart chaotic, which is that, this. I'll keep my fair value gap on. This. So who's been paying attention? Why do I need to be in at the top third or the bottom third on the bounce or the rejection? Yes. Risk to reward. Or else what are you even trading for? Were you trying to trade against the wall? Like, it's like, what's the fucking point of the trade? Like you're gonna risk $100 to make 20? No. Sure. No, the midpoint is just oftentimes in a fair value gap. That midpoint is a place you'll see something kind of like this. You get that shoot off into the fair value gap, and you kind of the midpoint can act like a rejection. Then you bounce through, you back test, bounce right off that midpoint, and push. Is my screen not being shared? Oh, no, it just really, it's the midpoint of the fair value gap. Oftentimes it becomes a structural level of support or resistance. Yeah, it's no. I don't take entries at I like if I see a midpoint of the fair value gap as a rejection. So if we pop up into here, we get that clean rejection at the midpoint, then I feel really good about taking like that rejection once we're back down here. I don't feel like we have to fill it if we fill that midpoint of the gap, or if we chop around and back test it and then take it as a bullish entry. If like right here, instead of popping down, we went up, you know. My cursor's is my chart not showing, guys? My cursor. Is my trading view chart isn't showing? What the fuck? Let me stop sharing and reshare. Holy shit, I've been sharing my Webull chart or my trading view chart this whole time, the trades and everything. Hold on, let me unshare. Here. Now can you see my Webull? Or I mean my trading view? Okay, well let me go. So when I was talking about the thirds, you didn't see me. Like, let me back watch. Look at all the shit I was drawing on my chart. Hold on. Like this with the thirds, where I said you can't. Oh my goodness, this makes me crazy. So like on a bounce play off a liquidity clear out, if you're not in the trade in this first third right here, your risk reward is whack. You know, that's what I was saying there. And I had all these visual cues for you guys, and you couldn't even see them. No, if you're like taking a trade, you like your risk reward doesn't make sense if you're not in for a reasonable risk reward. So I was talking about how if you're taking that bounce play long, you got to be in this first third, or the risk reward is backwards. And the same on the rejection. Like if you're taking a 0.25 rejection, you got to be in before that, like third of the way down, or your risk reward is kind of upside down. Yeah, I was showing all sorts of shit. That's so disappointing. Look at all this shit. No, I said no liquidity was cleared. No, it's because we didn't create a lower low. Yeah. So yeah, I mean, so right here on this specific chart that I wasn't showing the whole time, that's really disappointing. I don't like any trades in here. This is a do not trade zone for me because we're just below that fair value gap. Which is proving to be substantial because it's right where we hit resistance the first time we tried to pop on through. And I don't like, it's a sucker's bet, the long, because we did not clear liquidity. And as you can see, when we don't clear liquidity, we get no fucking volume. I mean, look at our volume, downtrending shit volume. And it chopped around. Did it pop up into the 0.25? Yeah, but with like this nasty back test, all this really crappy range, like we're not getting anything with any sort of oomph behind it. It's shit. So, you know, no, this is the 1 minute. I'm in the 1 minute. Yeah, same on 5. Exactly though. Is my screen still not showing you guys? Okay. No, I'm on the 1 minute. Okay. But anyway, it's just chop. And if you flip to the 5 minute, exactly. Look at everything, indecision candles. We didn't clear liquidity. I do not want anything to do with a trade in this box until we clear out that liquidity at this point. Maybe a rejection of the fair value gap and then the dip back below, taking those puts down again would be my only possible trade. But that's it. Nothing else, because we did not clear that liquidity. Could it come down all the way now and clear out that liquidity and continue to dump? Sure, then we'll take the puts at that point. But as of right now, we have imbalance and indecision. And you know how else we could tell we have imbalance and indecision? Look at that fading volume. Imbalance and indecision volume right there. So we wait. We don't take the suckers bet. There's no reason to take a play here. We have not cleared liquidity. We have not done anything that makes me feel like there is a play to be taken. Now we've cleared liquidity. So let's get ready to rumble, boys and girls, because we now have cleared liquidity. And we got that volume candle as we did it. So let's see what happens now. So now, as you know, oh, go ahead. Like I said, the second you clear liquidity, you get the move. And I didn't get a chance to buy my short, but that's okay. That candle after liquidity clear out is what we wanted to see. I'm okay with missing it. I was just literally trying to explain to you why this was all the suckers bet. And the second we finally cleared out that liquidity, now I prefer a back test first. I want to check the Qs and see if we did get a back test. No, we did not on the Qs either. And that's fine. I personally prefer back test. I want us to back test that price point before I take the trade. So I think we will. I think we come back and we back test that right here. We could continue dumping, sure. But I think it also reiterated why in here it was trash, freaking bad trades right there. We didn't want any of that. We came up to that 0.25 and we could take the short there, but I really wanted to see us even above the 0.25 first, which is fine. But even this trade, yes, it dumped, but I don't take the short here. I needed the retest first. We never got it. But we did come up and test the midpoint of our impulse candle and rejection right there, which is another scalping method I do use. So right there at that rejection of that candle is a short entry. And then you just play it down. And on those on these type of scalps, right there. And then our stop is at the candle body, the open of that candle. So we would slide that down with us. Beautiful fucking short. I mean, that's an insta 90 points. Insane. Yes. I wanted, when we cleared this liquidity, I wanted it to pop back up to this penny and then take the direction. And then I take the trade off that directional trade. And because we didn't get that, and we got this impulsive candle at that point, I midpoint that candle. And there's two things that can happen. If we were to close above that midpoint, then I'm waiting for the same thing. I want that retest of our liquidity here. And then I'll take the downside or upside trade. Or what ended up happening, the second we hit that rejection at this midpoint, at that candle close, or at the hard rejection and the shoot down through, we take that entry, which realistically is right about, we're not taking it obviously right there. We're ending up in the entry right about here. And then we're just playing that on down and we're up, what, 100? Yeah, insane, 130 points in 3 minutes. I mean, this is scalping. This is high risk. It seems easy when I'm in your ear talking through it, but I mean, it is easy because it's all about the volume and that liquidity. Yeah. And it's like, and it's okay. At that point, it's okay. Okay, I missed this, but that doesn't even freaking matter. I missed this big deal because I took, like, we would have gotten an entry, really realistically gotten that entry at 294 and play that all the way down for 140 points. Yeah. I have, actually, it's like 160 points. I have a video on liquidity clear out on YouTube. Um, and with liquidity clear out trading, for me now, guys, if you took that short, 100% out, take all your profits and run for the hills here. Bye, bye, bye. That's like, oh, 5K payout. See ya. That was disgusting. That was sexy. Um, but as you can see, the exact things that I've been teaching for 3 years. Okay, we didn't get the retest of this, but we got that midpoint of our impulsive candle down. We didn't even, it was so bearish, we didn't even get the retest, but we got the back test of our midpoint of our candle here. And what you mean by the midpoint, people had asked it, put a fucking fibs on it. If you can't guess, if you can't like see where the midpoint is, put a fibs on the damn thing and draw your line at the 0.5. Like, you know what I mean? If you can't eyeball it, just put a fibs on the one candle. And then you take your entry on that heavy rejection and on those, okay, where's our stop loss? Above the wick of the candle. Would I consider the daily a head and shoulders on Q and SPY? Let me look. I sure the fuck would. Yeah, that's definitely a head and shoulders. Yep. I do. I do. Where? What are you talking about here? Here? Here, right? What time frame are you on? Yeah, right at the 618 consolidation at 9 o'clock. Right here. Hello? Did we just lose Mag? I don't hear him. Ow. Yes, because at that point it was, yes, it was low a day there. So yeah, I would consider that the same exact thing. And what happened this time, though, as we could see, so we had a lower, same thing. We just did not come back. We did not back test. And this one, we didn't even get like a midpoint. Oh yeah, we did. We came back up on this candle because there's our open of the candle. So yes, same exact thing. I only use liquidity. I only like liquidity clearouts low a day, high a day. Don't complicate it. Don't start doing that shit at every single little level. Low a day, high a day. No, not you, not you. And in general, because I've had people like trying to like be like, oh, this intraday low a day, that isn't really low a day. Like if we were to pull back here and be like, is that the same thing? No, high day, low a day. That's it. Yes. Oh, for uptrend? I mean, depending. Yeah, I mean, normally those are the type of candles I like to scalp. Yes, absolutely. It's been such heavy selling though. I've been a little more apprehensive. This was actually a nice little symmetrical triangle that had formed too. But I mean, it really kind of just the whole thing really showed you just kind of plain continuation. And even if you miss like the low a day clear out, which was right here, I've redrawn my fibs, but it was right here. You know, getting that and having that back test of our impulsive candles is awesome. And we're getting that right now. So we have this impulsive candle up. How do we kind of scalp within that? And so if we were to midpoint it there, we can see how that second candle it opened and just flushed through it. So that's kind of like your bull bear line there. It does, but we didn't get 9 out of 10 times. We prefer retests. You're always going to be safer trading a retest, period, no matter what. And unfortunately, it's so heavily bearish that sometimes we have to pivot off what the retest denotes. We never got the retest of the wedge. I prefer, okay, that back test down, retest the wedge, then take the entry. Or I prefer we get the clear out of liquidity, and then we grab it on the way up. Since we didn't get that, we get our other option, which is our scalp type, a little riskier, but a scalp type option, which was the midpoint of our impulsive sell candle. We back tested that, and it's happening right here too. Look at what just happened. So we midpointed our impulse break candle, okay, and we got attempted dump, closed right on it, and then ripped through it, bounced, and you know what I mean? Yeah, like this candle right there. Because once we reclaimed it there, perfect entry on up. Beautiful entry. But it's really tough because it is sketchy, high risk, and you've got to be on it with the cuts if you trade like that. You've got to be ready to cut instantly. Like for something like this, my stop, whether it's we're playing futures, whether we're playing calls, is literally at the wick of the candle right here. That's how tight you have to play the stops because we're banking on those impulsive rush type moves. So if it fails, it's going to fail fast as fuck. So that's the other part of it. You've got to be prepped for an incredibly fast fail when you're playing like that, or you just flip it to the 5 and wait, midpoint the 5-minute candle, because same concept, but on the 5-minute, look at, we've got this impulse candle down. Let's midpoint it. Here's the midpoint of our 5-minute candle of our impulsive range, because it's like, and it's always the second part of that is, what's our primary purpose in the trade? Do I care about what happened up here when I am trading 5-10 minute trades? No, I care about the previous couple candles. I care pretty much about what has happened from our loss of low a day on. So we care about this range. That's pretty much it for now. So we have this impulsive breakdown. We have this continuation candle. It's in our 0.25 range, midpoint that candle. And you can play essentially on charts like this. You can midpoint all these 5-minute candles, and these can be essentially your stepping stones. Like you've got the midpoint there, you've got the midpoint there. Oop, didn't mean to move that. Hold on, let me fix that and lock it. There we go. And then even this candle, midpoint these candles, and those can be the stepping stone all the way up. Second part of that, we've got a new fair value gap to draw on. For me, those two, even fair value gaps, I don't even necessarily use too often. I think fair value gaps are incredibly overused by people. The only time I give a fuck about fair value gaps is in this super massive selling or ripping like this, because it's going to be our zones where we could kind of expect, because what's the point of the fair value gap? What do we care about? Areas that we're going to have resistance or we're going to push through super quick. So on an area like this, it's tough to say like, holy shit, when it goes straight up or straight down, it's hard to see our areas where we're chop, where we should prep for profit taking, all those things. So what the fair value gap gives us is areas to expect support, resistance, or like to break through, so like right now, and you can hyper strategize it like that. On our 5-minute, that's the midpoint. So we're pinched between the 5-minute midpoint of our sell-off range and the entry of that impulsive reversal candle right here. So we're pinched between those two things particularly. And a lot of people are like, are you over analyzing that? No, because it's showing the importance of it. We're bouncing in a range where we can kind of feel safe about our calls. As long as we kind of are consolidating in this area here, we're okay. We're safe with our calls. We're holding the midpoint of our reversal candle that we originally took entry in, and we haven't had the door smack of our impulse down candle. So for me, it's like, okay, and we're attempting to break through it, those type of things. There's weight, because I don't care about a lot of things. I'm not looking at the 9, the 21, those type of things. Yes, they're good guides, especially new in trading for a confirmation. I trade price action and volume. And these are the ways I do that with the candles. This is the ways I put a visual representation on what the numbers and the buys and sells are telling me. And we know, because of this midpoint, and I know years of experience, how algos work, whatever it might be, I know these midpoints fucking matter of this 5-minute range. I know that reversal candle mattered, because this, and you could see, we back tested it the whole time. This little goofy 1-minute reversal impulse candle midpoint has literally turned into our structure for the last 10 minutes. As much as it seems like it doesn't matter, it does, because it is essentially proven to be our safety net that tells us we can stay in the trade. We held that area. We're okay. We can stay in our trade. And then it pushes through. Yeah. So no, I get it. You gotta test strategies. I totally get it. Everybody's got different strategies. So now what's our next two targets? Our 0.25 and the bottom of our fair value gap. So in doing so, with just fibs, which we love fibs on straight down like that, and these fair value gaps, which are both volume based in trading, we've got our next like 4 or 5 targets, the 29,273. And then it also tells us when not to enter a trade. Like, we don't want to enter a trade right at the bottom of this fair value gap, because we've got this massive ass range. So we need to really decide, like, and then look at, like, the midpoint of the fair value gap happens to be right at these lows here as well. Like, it just lines up where these type of things. Nice job, What Rain Drop. Love it. So I don't know. For me, this is what works for me in scalping, especially like kind of scalping reversals. When I talk about like when like all of a sudden afternoon I pop up and it's like, it seems like, how the fuck does this end up being where it rips 60 points? Like how'd you time that when we've been getting these 20 pointers for the last 2 hours? It is a combination of these type of things. And sometimes it's really tough to go through and show it all on the fly via DM, via main chat. But this is how I'm trading. If I'm just trading and I'm not on live and I'm looking at the charts, this is the shit I'm drawing all across the board. And then once it's invalidated, it's kind of like almost deleted. Like this line here, yes, we can expect to kind of bounce off that, but I'm kind of over it now. It's like 10 minutes removed. We got the play out off of it. I don't really care about that as much anymore, because I'm definitely, if we were to pull back to that initial midpoint of this line, I'm definitely not taking calls there again, because we have proven we couldn't even sniff the 0.25. So it's not as good anymore. I want it like that first hit and that's it. I don't want the second touch, the third touch, because the volume's not there anymore. It's shriveled up, it's dead. You forgot to water the flowers. You got too far away from the hose. Whatever you want to call it, I don't give a shit. So this line I delete. You got to delete as you go, or else your chart looks crazy. And now, so I've got this, and I've got our little fair value gap up there. The 1 minute, like that reversal where we liked, like right down in here. But this one, which is on our 5 minute, kind of the midpoint of the sell off exhaustion candle here, which is probably right about here is the midpoint. Yeah, that one's still valid. That one is being respected. We're coiling right around it. So we do still care about that line for the most part as like a continuation. If you still had a couple runners left, that kind of thing. And then on top of it, we are creating higher lows on the 5. That's how you could get a little more confidence in continuation. We had a great conversation yesterday about like the negatives and positives of continuation yesterday. And sometimes it works out, sometimes it doesn't, the risk reward behind it, all those things. So, it's just those combination elements that, so now, and then once we kind of break away from that and it's no longer part of our relative trade, I'll delete that line as well. But for now, that's kind of how we can turn a 200-point sell-off in 8 minutes into a segmented trade where we're not really sure how to draw our support and resistance. It's kind of like, is it a bear flag? But we liked the little pop for the long and all those type of things. You know what I mean? So like I chart as I go in those ways because everything I'm charting is volume dependent. I give a shit about volume. I care about the price action and what prices are acting as magnets and what prices are acting as liquidity surges. And as of right now, we could see and now it's starting to like chop up. So in my opinion now, and we're losing this flag a little bit. But so like, for me, like I'd be out of any runners there. It's like, okay, this is kind of fading away. Could it reclaim it? Absolutely. But, because it's also like a flag that we're breaking bearish on. So, and then there you go. It's starting to sell off. So it's very, because I could all day long say, I want to flash it on a 5 and I want to see the doji on the 5. And then I want to wait for the pullback candle or whatever pattern it might be. But there's always variations of the same things that I'm looking for on top of those things that are kind of like little just indicators, little hints, that type of shit. So thank you for asking, because it gets me like kind of digging into it, and explaining it in different ways. Because sometimes like I don't know how to explain things simply because I feel like I've explained them, and then I get a different approach to breaking it down, and then it helps everybody. So thank you. Yeah. Look at that. Even though I don't care about that midpoint anywhere, look where we bounced. Like the risk reward isn't for the juice, isn't worth the squeeze there. But isn't it funny how that's exactly where we bounced though? So it just shows you the importance of those things. Yeah, I wouldn't take an entry off of it, but it just shows that it's still in a way relative. And it also shows the importance of midpoints in any high volume situation. Those midpoints, so that importance is like, like this 5 minute candle is some of the highest volume of the whole day. So that midpoint of that candle, we definitely care about. If we can close back above it, whatever. But then it starts to turn into, like we talked about here, or it's just chop and there's nothing good left anymore. We have done what we could. Remember when we were in this area, I was talking about we didn't clear liquidity. We're under the 0.25. I'm not interested in shit anymore. That's pretty much where I'm at now with this level. We played that little bit of a play. We were hoping we get the continuation break up here. We didn't. That's okay. And now I'm not interested in shit until we come up into that 0.25. We clear liquidity lows, something like that. No, I want to see the low a day liquidity clear out, which is 29,083.75. I have 29,083.75. Am I wrong on that? Okay. 29,083.75. See low. Okay. Well, you can always check over here too. It should show I have that on the whole high and the low of. Okay, yeah, I would turn that on. That's nice to have. It's right. I think right here. Yeah. Yeah, high and low price labels. Turn that one on. So whatever range you're in, you can see the high and the low of that range without having to do anything. And there we go, up to 0.25. And it's funny how technically it held our initial entry the whole time, which was the midpoint of our breakout candle right there. So, I mean, as much as I was like, I don't care about that line anymore, it's been kind of too long, it still held. I didn't think the risk was there at that point, but it was fucking perfect. It held it like beautifully. And now we're starting to break. Yeah, it's the under labels, the high and low price labels. Right here, I hit my little settings. Yeah. Nope, I don't care about those. I want the high and low price labels. So whatever range I'm in on my chart, it's showing me the high and the low over on the money line. Yeah. Yeah, because now I could see the high and low a day. I don't have to worry about the lines drawn, nothing. It's giving me the exact ones automatically. Yep. I know. It's just random, stupid little things. I hear you. I hear you. Yes, I do. Yep. And that's the exact, yeah, yep. That's exactly it. What the fair value gap is, there's a gap in between 2 5 minute, which means we moved very quick through that level. So that's exactly it. Um, you want to be in at the confirmation break of it in, yeah, through it. Yes. Yeah, I want the confirmation. I'm not taking entry right at the gap. I'm taking entry at the confirmation and breaking into it. Yeah. 0.25 rejection right here. Like right here, we're kind of rejecting right at the gap just below it. So it's at the start of wick. At a 5 minute candle, it is wick to wick. Yeah. Here, there to there. And then this one is here to there. 1 second, guys. Let me let my dogs out. I'll be right back. 1 second. Come on, guys. All right. I can since I'm still recording on WAP, I can segment that and make a class out of it if you guys want. Just a little. If you want me to do that, KT. Oh, he's not in here anymore. All right. What do you guys think? Are we going to continue on down? Are we going to pop up here? Yeah. I mean, we have to. I don't love that we've already. Hold on. Let me go back to Weeble. Have we lost yesterday's lows? Because I wanted that inside bar. Yeah. I don't love that. I want us. We need to close above 715.98 on Qs. That's what I need to see. No, you're good. Look at how well Meta held up, guys. That's big. Captain Underpants, 45-degree angle. I can go over that real quick. Let me go to my chart. So what I mean by 45-degree, are you listening? I just want to make sure. I don't want to go over it if you're not. Okay. What I mean by 45-degree angle with trading is trades are incredibly better. All right, I'm talking about two things. I'm talking about fibs and I'm talking about flagpoles, okay? So I want my fibs and my flag poles. So meaning a flag, like we have bear flags here all day. We've got this pole, flag. All right. I want those at least a 45-degree angle. What that means is we want to see the movement better than 45 degrees. So as long as it's kind of like this and it stays in this upper half, I'm happy. If it's a flagpole or a fibs that's kind of very choppy and lower than 45 degrees and it's kind of like this, it really, to me, doesn't have the pressure I want to see to feel like it's a satisfactory or a higher probability, not satisfactory, higher probability break here. So if we go back to the chart today, it does check the box. So if I was to just take like just so you can see like in the actual measuring of it, if I was to measure this sell off, which is this right here. All right, and we did the line. It was better than 45 degrees. It was actually almost exactly 45 degrees. Okay. And same for this one. So if we get the start to the end of our flagpole, this one was better than 45 degrees. Much better. See that? So when it's downtrend, obviously you want it on this side. And I actually should have drawn that from here to here. Nope. There we go. So this one's pretty much right on it, and this one blew it away. This was like almost straight down. So I didn't want, if this flag would have been more like this, boop, 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 like, yes, it's a flagpole, but I want the flagpole, and you can reverse this. It's sell off, but it's still a flagpole. It's a bear flag. I want that flagpole to be like double the angle of the flag. So this one like straight down. This is like double the angle of going back up. Does that make sense? That's what I mean by the flagpole. It just, for me, it creates higher probability and cleaner setups to trade. Because I don't want to be where it's like a question mark of like, is this really a flagpole? Is this, it's borderline. Did this fibs pull back too much? And then if it's really A plus when we have the flagpole better than 45 degrees and then the flag worse than 45. So we would want the flag to be like worse than 45 degrees. So we want a flat. So like the best fucking flag and flagpole is like straight up and then slow. Yes, exactly. And yep. So then on downtrend flags, we want straight down and then because what does that tell us? When this is the pattern we're getting, it means that the bears clearly in control. And then it tells us, because what are we looking for on a flag? Remember, we're looking for continuation. And it shows us that the bulls never came to play. And it shows us the reverse on a bull flag. It shows us the bulls just chugged on up. We fucking flew. And the bears never really came in to push it down. And then, boy, if we hit that, and then the creme de la creme on any flag, as we know, we want to be right in here. That's where we want to pull back to. Like when I see a flag going straight up, and a slow burn down into that 50%, like my mouth's watering. That is like A+ setups for me with confirmation, of course. And especially the best flags are like the first 30 minutes. When we get that breakout, that slow pullback, and then we get that secondary play. We really like that. So honestly, it's showing us, like, let's look. We have two right here. So this second flag, if we put a fibs just on our flag, or I don't need to put a fibs on it, but we put our flagpole right here, we had exactly what I'm looking for. And let's put a fibs on it. Let's see. Did we back test the 0.5? I think we did. Yep, right there. Right off that 0.5 on our bear flag. This is actually kind of a perfect bear flag. And now we're coming down. So if we measure the move from here to here, and then from here to there, we know our target, if we lose low a day, our measured target's to be right about here. And again, none of this is perfect. It doesn't always work. The best probabilities that there is in the freaking world are like 80%. So there's no guarantees. I hope that made you kind of understand it a little more, Captain Underpants. I love your name, by the way. And yeah, so and we had that perfect flag right here. Same here. This was only like a 0.25. That was probably exactly a 0.25. I think it was because this was our original range. Yep, right around the 0.25. So with flags, it's really important for me, that just solidifies that the Bears are really in control today. Or on a bullish day, the opposite. Yes, yes. And that's exactly it. Like the double the length, that's exactly it. That's that midpoint of the flag, which we literally just got right here. We just put a fibs on it. If that was our flagpole from here to here, the midpoint is right here. Look at that. The flagpole was double the length of the flag. And now if we were to do measured move, we should expect to be down in this 970, maybe up in here, because we have already sold off twice. This is the third flag of the day. So yeah, great question. I'm glad you asked. It's just go ahead. Yeah, it was just like things like this are really about keeping your charting clean. I don't want any like, is it or isn't it? I don't want to draw any lines that are like, could it be? Is it not? Is it this? Is it that? Like, I want this is it. Like E-Trade just said, puts and chill. We got our puts and chill. We had the sell off. We had the 0.5 retest. Perfect little flag here. We even had some bullish moves on the way up. We talked about everything within that we could have played. And then another, and then the flag continuation down. I want very clear in my trading. I want to be like, that is such a sexy damn flagpole. I want this perfect 0.5 pullback, all of it. I want all that. So yeah, I mean, here, yeah. So yeah, it didn't really clear liquid. This is just one of those days where the second and this happens sometimes, the second we're losing low a day, we are just hemorrhaging. The Bears are in clear control. We're not getting any retests. So, and that happens sometimes. But today, we're not getting any of those retests, and it's okay. There's other ways to take the plays. I don't love taking just, and KT says it, we all E-Trades. We don't want to buy into low a day. We want the little bit of a retest. That's when we're usually wanting to sell our puts. So not getting that retest does make it tough. But there's we had the flag, we had this, that, all the I owe $1 in the jar. I'm up to $12. I'm keeping track every time I say this, that, the other, guys. $12. So, and we never back tested it. So at that point, there's other ways to take the trade, but I mean, the third dump of the day is hard to take anyway. It's hard. Here's our measured move. We're literally coming down to our measured move right here. Freaking nailed it. And that was, again, this here to here is the same move as here to here. Boom, right there. I mean, we are literally within pennies of the perfect measured move for a flag trade. And here comes. Are we going to bounce right there? Are we going to get the perfect measured move, guys? We sure did. I wish I was like wanting to take straight. We would have made a lot of money on these puts, but I've been kind of more in teach mode today. Yeah, 5,000% puts from those the first liquidity clear out. So this is like a good liquidity clear out. Way back at the beginning of the day up here. This was our low a day. We cleared out the liquidity here. And then We kind of chopped for a few minutes, but as soon as this candle right here, the first candle that back tested, if this, because this was our original, we could see this was our low of day right here. Oop. I didn't know I was on drawing tool still. Sorry. There. So this was our original low of day right there. All right. We came down, we cleared out the liquidity right here. We kind of chopped around. But then when we came down and had the actual candle close below it, and we take the entry at that confirmation, it just straight dumped. And yes, technically, so this is where it gets a little dicey. All right. So technically, holy shit, this fucking selling. This is why we haven't been touching swings, guys. That Tesla, we timed it perfectly. We hit 80% on the call. No harm, no foul. I'm happy. So technically on this, if we were watching it in real time, Mag, and we had done one of these where within the candle, we dipped down, and then within that same 1 minute candle, we dip back up above this, and then close below, then you can take that entry. It doesn't have to be a different candle. It just means even on like the 1 second chart, we want the main process of it is we clear the liquidity, we pop back above it, even if it's in the same 1 minute candle, and then we close below it. You know what I mean? So while it doesn't look like a retest, it could be a retest. It might have. It opened here. Obviously, at some point, now it depends. Did we pop up after we had at least a touch below? We weren't watching it in real time. Maybe you guys can answer. Once we dip below that 29,083, did we pop back above it at some point within the candle? It's very likely we did. You know what I mean? So overall, we could have cleared liquidity and just not have seen it and not have been, oh my goodness, this is so sexy. And like, I kind of love it for teaching because you guys think like I don't like playing downside too much. And I really don't, but I could teach the shit out of it. Great teaching opportunities though, about just price action and how to trust, how to not be like, oh my God, we already sold off 400 points. We can't take any more. We can't do any more. You know what I mean? So it's simply not true. I mean, what a disgusting, I mean, I guess the measured move would be from here. Are we counting that whole thing? I mean, that's pretty much it right there. Maybe I was shortchanging the flag. Maybe it was this entire thing. Beautiful, beautiful selling though. I mean, beautiful trades. And feeling confident within the trades and being prepped for, like, even with our original 5 minute, remember this 5 minute candle we talked about here. Okay. How it held it for these candles, even taking the loss of that. So the close of this candle here, you know, for like kind of a position you could take within it because this was such a high volume 5 minute candle. I mean, even higher volume than this most recent candle. This is second highest volume of the day. And how that proved to be, and turning this into like segments in the trade where you might take it here. And even on that 1 minute when I was saying, oh, I don't care anymore about this, but it really proved to be important. Even when I said I didn't care, we could see how in this area here, we attempted to bounce at it. And then when we failed it, we just dumped. And would you look at that? Even though it's almost like feels like splitting hairs because all we see is this chop after the fact. Yeah. Disgusting. Like you called that and it just filled it out, didn't it? Yep. Look at this 4 hour, guys. Yep. Trader talked about this like an hour ago and said, and I said, hell yeah, it is. This is perfection. The shoulders are perfect, symmetrical. I mean, you want to talk about stair step up and elevator down. Holy shit. Look at that. Yeah. That is. So now, and here's the thing with head and shoulders patterns. Technically, the high probability head and shoulders hasn't even happened yet. We're just at the neckline. If we lose this neckline, 28,500, 28,500 on NQ, we'll see. And I would love it. Do you guys understand how bad I want this selling to reposition us into some really good longs? Because we made our money on the upside. We have one losing trade, that's fine. A couple runners, we had to cut at break even, that's fine. We made our fucking money. We're hands off. We hit all our profitability. So I can't wait until I want more selling. I would, if we get down to 28,000, oh my goodness, guys, you don't even understand. Like, I've got the charts. We're ready. So we'll see, because we're just now at the neckline too. That was a beautiful, beautiful call out. Yep, trader. Absolutely disgusting. But anyway, Mag, what I was saying with the line I said I didn't care about, how when we look at something, it looks like chaos after the fact. We have no clue, but in real time when we were trading it, and we had that initial break, and how this proved to be an important area, how it attempted to bounce here, and then when it finally dumped through, even taking that trade, or the alternative of that, we had the impulse candle, midpoint your impulse candle right here, and look where the next candle hit resistance, right at that midpoint. So there's multiple ways to take entries into trades, as long as you've got, and I call it the sniper vision, as long as you got that sniper vision on, where you're going to cut it quickly if it doesn't work. Like, you are out, that's it, no matter what, because we're banking on the algorithms kind of pushing it through. And it really did show here. It was almost like this was our liquidity instead of down here at the low of day, which is interesting to me, because it did behave like this was almost low of day, but this was really that area where, you know, it just pretty much played out into, I mean, really perfect trade. And then on top of that, this perfect, any sell-off. You can play within the trend, fibs within the fibs all day long. When it's these clean sell-offs, guys, draw micro fibs within it. You know, pop that fibs on this sell. Identify that midpoint, because it's giving you additional, it's also the 0.25 is exactly where that 0.5 is. Look at that rejection, and we just fell through. We had the perfect bear flag. There's so many ways to go about it that are high probability, really clean setups. And the thing about these setups, because I always talk about over trading this, that, the other, but I'm another dollar up to 13. But I'm also always going to show you, if you are someone that is inclined and predetermined to want to kind of trade that heavy, a little bit heavier, have high probability ways of trading it. Have that calm within the chaos. And these are just different tips and tricks you can really use to be successful in that trading, with really great probability approaches to it. I feel like I talked about a lot. Sorry, guys. I was way more interested in kind of talking through some stuff than trading it. So, but I think it's important, because a lot of you like to take your own trades more than sit here and just listen to what trades I'm calling out. All right, we have another fair value gap on the 5. You know how to ask the right questions, Mag, that get me on tangents. I almost said a bad word there. VJ. All right. Ooh, I kind of almost like the reversal here. All right, so same thing. All right, on our 5-minute, our impulse candle down. Let's midpoint our candle. Kind of what we just did the previous. We haven't gotten like one of those true bull candles yet. I kind of want to see one of those strong bull candles before. And I wouldn't consider this one, but you can, I mean, even this one, midpoint it. Look where the rejection was. right at the midpoint of the attempted break candle. So we'll watch those two areas. Thank you for asking like questions to kind of get me a little motivated though. Oh, I appreciate that. That was a crazy call out. I can't believe we filled out that whole shoulder either. But I will clip this, especially the last hour, because I think there's a lot of good little nuggets in here about day trading and how to kind of work on the fly day trading. Because it's I could say, oh, do this, that, the other, but every day the candles look different. There's different scenarios. There's different everything. So I appreciate when you guys do ask because I would much rather do this than talk about nothing and force a trade, you know. But even though I didn't call these trades, we got to really clearly see how it plays out here. So I appreciate all you guys for asking. And I'm gonna end this on WAP so I can cut it and repost the last hour because I think it was some really great questions in there. I appreciate y'all. Thank you. Thank you.